Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Great to see you both. Welcome back, Ben. First, Don, how are you feeling about the markets? We've been hitting some highs. I know you have at least one of the Magnificent Seven that you're trading for us today. Your thoughts maybe about the Magnificent Seven or the market overall?
Yeah, market overall right now, one of the things I'm having a difficult time with is what's left to buy. So the AI trade, it's been done again, still exploding to the upside to some degree. Maybe everything is actually paused right now, again, waiting for that PCE data effectively tomorrow morning. But again, at this point, I just do not like the overall risk reward, neither in the S&Ps, the NASDAQ, or the Magnificent Seven. That just simply means there's some upside potential, but the downside risks right now could be absolutely phenomenal.
Okay, so phenomenal because you like to trade to the downside. So phenomenal for someone who's shorting or watching for pullbacks and wanting those. First up, you have a bearish put spread for Target today. Tell us a little bit about the story behind this.
Sure. So my bearish positions are extremely targeted, and in this case is about to be in target. So we all saw the consumer confidence number out. We all also recognize that the Fed is now going to hold rates higher for longer. We've actually pushed off those Fed fund futures considerably to the first rate cut. And at this point, I think everybody has to start questioning, is that consumer going to finally be tapped out to some degree? Moreover, if you take a look at Target, it's had a fairly meteoric rise recently in just the last couple of months. I mean, it's made the kind of move in the last few months that would normally take like 2 years to effectively play out. Again, all in the last few months. So I am taking the bearish position in here right now and looking for that pullback. This one's going to go out to the May 17th expiration. So in a position like this where I'm stepping in front of a freight train to the upside, I like to give myself a little bit of time. And in this case, going out to that May 17, I'm buying the 145 puts, selling the 135 puts. So it's going to be a $10 wide put spread. It's a $2.60 debit.
You saw TJX. Was that a new all-time high, Don? Were you surprised when you saw that one?
No, you know what? I was actually looking at that. I was looking at Target, shopping through like Costco, but of all of them, I think actually Target's going to be the most vulnerable out of the pack right now.
Yeah. And, this was, Ben, a darling, right? There was a time Target could do no wrong. It was new high, new high, new high, and it started to falter. And we've seen some of that. Tell me about the charts, Ben.
Yeah, Don was talking about how this consumer may be tapped out. Nicole, I don't see this trend to the upside, this bull move we've seen, showing any indication of that as of yet at this point. Let's take a look at the charts here, because you mentioned how they had been somewhat sideways, right? Mostly into the end of last year, beginning of this year, around this 140 level. You can see we broke out here, though, recently to the upside, and you can see a series of higher highs, higher lows that's been playing out. We're looking at a 30-minute candle chart here, and my eye was just drawn to the fact that kind of, again, after a somewhat sideways start to the beginning of the year, we've now seen a very well-defined channel higher. Take a look at this. You can see again that we're seeing a series of higher highs and higher lows, a very bullish pattern playing out here. Again, a 30-minute candle chart going back to the end of last year, beginning of this year. Let's take a step away from this time frame, add a little bit on. I've got a 4-hour candle chart here in a very similar depiction. We're talking about well-defined migration of value higher. We're looking at the move off the October lows we saw down around 103. You can see areas of balance that have formed at higher and higher levels. And then, interestingly enough, every once in a while we see this play out. Look at this. We're talking every $5 increment here. Shares of TGT have found a value. And so, again, very well defined here. Bullish pattern here playing out here, right? The longs remain in control. And, this is something that I like to look at, because we oftentimes talk about how to establish trend. But in this instance, what we're seeing is a reversal of trend that had been playing out off those lower since the summer of 2021. You can see that balance areas were forming at lower and lower levels. And when we were kind of consolidating down here around 110, the bears wanted a new lower low to form and an area of value to form to see that follow through in terms of that trend lower. Look what happened, the exact opposite. We started to work our way higher, took out 132, trending higher off that low since. I see some bullish momentum here still, Nicole.
You know, and I'll say this, Don, on the bullish momentum, Oppenheimer this week actually raised their price target to 170 from 160 on the 26th of February with their outperform rating. So they still see some upside potential here. So is this more about a short-term move, or are you worried big picture, Don?
No, this is actually absolutely. This is going to be bigger picture. This is going to be bigger picture, a reversal. As I said, I mean, who's out there wanting to jump into price action that's been basically straight up? I mean, this has been a parabolic move inside of Target, and that's exactly the kind of moves that I like to fade. I like to step in the way of it. I like to give myself some time, but I also like to define my risk. Look, you know, I can be wrong for the next couple of weeks, but eventually this thing is going to have a decent sized pullback, and I'm going to be there for it.
All right. Well, GM has been on a run upwards and a couple of gaps higher, too. In this one, you have a bullish call spread. Tell us a little bit about the story there.
All right. So, you know, Ben might be a little bit more forgiving for this one because I am going to kind of hop on trend. So GM has actually been in an incredibly tight range, just this $30 to $40 range. And it's been there for basically 2 years where it's been pinging back and forth, 30 to 40, 40 to 30 and back and forth. But we've actually got a decent bid under us. And all I want to do at this point is just hop right onto that bid, look for a little bit of a break above the 40 level, and I'm out. So am I bullish in here? Absolutely. It's a little bit of a shorter duration. It's a trend following trade, and effectively just looking for it to break this 30 to 40 range. The trade is the March 28th expiration, so a little shorter duration than the previous trade. I'm going to be buying the 40 calls and selling the 42 calls. The trade is done for an 80-cent debit. I'm only doing a $2 wide spread. As I said, just want to hop on trend for a short-term burst to the upside.
Yeah, one headline I missed, GM's cruise to restart supervised robo-taxi. They're going to test those in Texas after months of suspension, so that's back. Let me see what you think here, Ben, when you look at the technicals, the charts for General Motors.
Yeah, very similar pattern here playing out, Nicole, in terms of what we just looked at as far as Target. You've got a bit of a channel to the upside, a grind as of recent, no rejection of a bullish pattern that's been playing out here, though, across multiple time frames, and a bottom forming on the bigger picture. Let's get into, first and foremost, I queued up an hourly candle chart here, and you can see a little bit of consolidation, that earnings catalyst, and then acceptance of the new move higher here. Again, we're talking about a 60-minute chart here, and what my eye was drawn to is that really well-defined transition. You get the horizontal overlapping, kind of random phase, and then you transition into that news catalyst, brings about that vertical phase where you see high conviction to the upside in this instance, and then you go back into that horizontal phase, kind of wash, rinse, repeat. But hey, earnings was the catalyst with follow through and zero rejection. Simply put a sign that the bulls remain in charge. And again, we're looking at an hourly candle chart, so we don't want to put too much into this one, but take a step back with me and you'll see as we queue up a little bit more time. Again, hourly candle chart here, but now we're going back to November of last year. Stock was trading around that 26 level, well-defined trend up, migration of value higher off those October lows from 26. Look at this. Recently, Don was talking about this $40 level. Well, we're through it right now here. This is a high conviction move to the upside, and this is exactly what the bulls are looking for. We're talking about, again, zero rejection, and actually now attempting to get something vertical, something out of balance to the upside here in continuation of that longer-term trend. Speaking of longer-term trend, it was to the downside, and then look what's starting to happen here. We're kind of reversing this. Taking out 36 was key. The move off that November 2023 low, well-defined trend from 26 recently back to 40 now. Again, that's a reversal of the lower lows, the trend that we'd seen off that February 2022 high. Taking a look again as we took out 36, this was significant, so got a bit of a bottoming pattern. Now, the one thing that I think the bears could maybe hang their hat on is that we have yet to take out some key levels here that were established. So it is a possibility that this is one larger area balance forming here right now, but coming off that V bottom here, it looks to me like, again, the bull's in control across multiple time frames.
Yeah. All right. So it looks to him that the bulls are in control, and the multiple time frames is part of the story too. Thank you for all of that, Ben. Final thoughts on this one, Don?
Yeah, no, I'm going to take what the defense gives me there. Ben and I are pretty much on the same page, and I agree. Again, that range though has been quite phenomenal. I think my concern in the near term is can it actually break through that range? But it looks like we've got the momentum on our side.
All right, next up, Meta recently hit highs of 494 and change. Not feeling too great on this one, Don. Why?
Yeah, this is where Ben and I are absolutely going to get into it here. So, first of all, in terms of Meta, there's a lot of places I could actually go with here, but one of the things that Ben might look at is something like a staggering 88 RSI. I mean, just absolutely staggering numbers that are being thrown off over here. This is exactly the epitome of what's left to buy. What do I really want to get on trend of a stock that's, again, we were talking about earlier, Target with a meteoric rise. I think Meta's up something like 40% year-to-date basis, and that's not including the fact that it rallied in both November and December without really having much of a downtick. I mean, again, the move here has been nothing less than phenomenal to the upside. It's parabolic at this point. One thing that's often forgotten, if you want to look at some of the fundamentals, it's just a pure ad revenue model. And I don't like it. I don't have to like it. I don't even want to like it. I got a love-hate relationship with this particular product, but I definitely want to take the other side of it, especially right now with data like PCE coming out. With that in mind, I am once again going to go out to the May 17th expiration because, as I said, when I step in front of a freight train, and this is absolutely a freight train to the upside, take the other side of it, I actually want to give myself some duration. I'm going out and doing the buying the 455 puts. Again, buying the 455 puts, selling the 445 puts. That's a $10 wide spread. The trade's done for a $3.15 debit. So it's a big time bearish put spread looking for a fairly wicked pullback between now and the May options expiration.
Okay, thank you for that. I don't know. Are you going to be battling it out on this one? Meta, please, Ben Lichtenstein.
Yeah, well, Don was pretty clear. He knows where I stand on this. Pretty well-defined trend higher. It's actually a great combination of the two in many ways. Take a look here. Earnings reaction like GM in Meta sent the stock higher. We've got a hourly candle chart here. You can see that well-defined transition. We're going from the horizontal to the vertical phase. And again, an overall bullish pattern with longs looking for continuation. That's going to come in the form of a new area of value forming at a higher level, a breakout out of this range that we've been in. And again, just sticking with that staircase type pattern to the upside. Speaking of staircase type pattern to the upside, look, as we add a little time on this chart, 4-hour candles, another well-defined trend up. Talking migration of value higher off those October 2023 lows from around 279, 280 recently to just shy of 500 up to 494.36. You can see we're currently balancing again around 470, and you can also see that high conviction phase that we just looked at, that vertical phase, and how we've accepted this new area of value in upper level. No rejection as of yet. Now, I mentioned here how this is very similar to the other two examples we just looked at in terms of GM and Target, and I say that because look, we're balancing or reversing a trend to the downside. The move off that low from last fall, well-defined trend up from around 88 to recently near 500. Again, as mentioned, that reversal since the fall of 2021, reversing that trend that we had seen since the fall of 2021. Don mentioned this freight train through the yard. I would add a runaway freight train. I mean, this thing has been, look at this, accelerating to the upside here, really building momentum and, again, taking out that 377, 375 high from last fall, or I'm sorry, fall of 2021, ultimately. I mean, this has been a stock that's rewarded the long-term bulls here. To me, Nicole, still looks like they're in charge here.
All right, final thoughts here, because he made his case that the bulls are still in charge. Final thoughts, Don Kaufman.
Yeah, this is going to be an epic turnaround eventually for this Magnificent Seven. And again, I want to be part of it. That is exactly why I'm actually taking the other side of course, this meta trade.
All right. Thank you so much, both of you, for the big three today. Don Kaufman of TheoTrade and Ben Lichtenstein. Good luck there at big names indeed. Target, GM, and Meta.